Hi guys, my name is Julian. I'm with Eagle Investors. I am a professional day trader who utilizes intraday pattern chart reading and candlestick reading in order to bag profits. Now, first and foremost, I want to go ahead and thank you for your time, for taking the time out of your day and watching this video. The purpose of this video is to help not only the members that are just joining our community and have never been on my stream before, but for those who have also been on my stream and just want to get a better idea of what they're doing wrong, what they're doing right, and what they can do to improve their trading. So I guess this is in a way I'm giving you guys a quick glimpse into my head and how I think and what what I recommend. Now, keep in mind, everything that I'm sharing here is my personal opinion. This is just what's worked for me. This is what's made me a consistent, profitable day trader, and results will obviously vary depending on the person. So, before any further to do, I just want to go ahead and thank you again for your time. I want you to watch this video thoroughly, and I will go ahead and jump straight into it. So, let me go ahead and share my screen here. And let's see. So, bam. All right. So, what we got on our schedule today is the introduction. Well, we already made a nice introduction. Scalping and day trading, the terminology used on the stream, the ideal day trading setup, and setting up the dome. Now, the dome stands for depth of market. I'm going to go ahead and cover all that, and we're going to talk about my thoughts on different platforms, trading platforms it is, and we're going to wrap it up with some final thoughts. So let's go ahead and jump into the first slide here, which is going to be scalping and day trading. So Scalping utilizes larger position sizes for smaller price gains in the smallest period of holding time. Okay, it is performed intraday. Scalping is under the umbrella of day trading. Okay, so scalping is a form of day trading. The main goal is to buy and sell a number of shares at the bid or ask price, and then quickly sell them a few cents higher or lower for a profit. So generally, when we're scalping, we're going for about a 5% in a true scalp. You're going in with heavy allocation, and you're looking for a 5% in and out, using obviously tight stop losses, maybe OCO orders, etc. Now, the holding times can vary, obviously, from seconds to minutes. This is what true scalping is. Day trading. So day trading is the umbrella, so everything else falls under it. It's a strategy where you buy and sell the same stock or option in the same day. So scalping is a form of day trading. However, most refer to day trading as a longer hold in comparison to scalping. So, for example, a better example of a day trade would be if I bought Apple at the bell and then I sold it maybe a few hours later. That's a better example of a day trade. That wouldn't really be a scalp. All right, so let's jump into the next slide that I've prepared for you guys here. So terminology used on the stream. This is very, very important, guys. I want you to pay close attention to this. So 0 DTE, I say this all the time, 0 days to expiration. Very simple. Weekly. When I use the word weekly, now I understand there's weeklies every single month and there's monthlies. When I say a weekly, unless I talk about something specific, unless I refer to the next month or something else, when I say weekly, let's assume it's Monday today. When I say weekly, I'm referring to the option that's going to expire this Friday. So when I use the word weekly, that's what I mean. All right. High theta. So you guys will hear me talk about theta a lot more than delta when it comes to day trading. That's because theta is very important to day traders because keep in mind, options are a depreciating asset, and the higher the theta, the quicker our asset is going to depreciate. So the premium has a high time decay and depreciates in value faster. Now, another terminology I'll use is I'm looking at Apple 125 weeklies, okay? What this means is I'm currently looking at this contract. I've saved an order and I'll be ready to execute if I find a good entry. Okay, so this does not mean I've entered the position. It means I'm looking at it. It means I like it. It means I've saved an order in order to be prepared to execute when I find the right time. I'm going in on Apple 125 or buying Apple now. You guys probably hear me say that all the time. Hey, I'm going in on Apple. I'm going in 125s. I'm buying Apple right now. Okay, so when I say that, refer to the previous one. Okay, so refer to the previous one. When I say I'm going on Apple now, I've already discussed what Apple contract I'm looking at. You should have already taken note of that. So when I say I'm going in on Apple, you know exactly what contract I'm going in at. And what that means when I say I'm going in on Apple, buying now, I've officially executed the trade and I'm holding the position. So at this point, I'm not holding the position, but at this point, the position has been executed and it's in my portfolio. All right, I want to be very clear on this. Sizing. This is probably the most difficult question to answer, but again, you know, I'll do my best breaking this down. So in my opinion, this part is tricky because we all have different account sizes. Okay, I don't know if somebody on the other side of the stream is working with a $2 million account, working with a $5,000 account, working with a $25,000 account, $500,000 account, etc. So it's very difficult. You know, I can't say I'm going in with 50 contracts. I'm going in with 100 contracts. I'm going in with 25 contracts because I don't want somebody who has a 25K account to go in with 25 contracts, you know, 25 Apple contracts. That's not logical, right? So I believe the best way to tackle this, and I've taken you guys' considerations. I've seen some, you know, I've seen some talks in the chats, and I've had you know, people quietly kind of reach out to me in DM regarding sizing. So the best way that I believe we should execute this moving forward is going to be, when I say light, now this is based on a 25K account, okay? When I say light, I'm referring to 2.5% of your portfolio, okay? So that is about $625 here on a 25K account, okay? Now, when I say I'm going in heavy, right, that's going to be 5% of that portfolio. So in this case, on a 25K account, it would be 1,250, right? So keep that in mind, guys. Now, this is very important right here for the guys with the bigger accounts. As your account gets bigger, you want to minimize this allocation. I'll say that one more time. As your account gets bigger, you want to minimize this allocation. Why? Well, why, you may ask? I mean, it's a very, very good question. So for instance, if you have a $500,000 account, the focus is going to switch towards continued, consistent growth and preserving wealth, right? So when we're at that 25K account and the allocation seems kind of high, we're more focused on growth, right? Growth, but logical growth, not Tesla calls, not, you know, put in half of your portfolio in the account, you know, in the trade, you know, using logic, and I'll get more into further details and down the slides. But you know, as your account gets bigger and bigger, the main focus is, you know, you're slowly gonna slow down on the growth. You're gonna continue to grow, but you're gonna want to focus more on consistency, right? You want your portfolio to really look like this, right? Up, down, like this. That's a healthy portfolio, consistent growth. If a portfolio looks like this, kind of like the pictures you guys may have seen on Wall Street Bets, that's not a healthy portfolio. That is a pure gambling portfolio, and that is not a portfolio. That is not a person that should even be day trading, in my opinion. If your portfolio looks like that, you're not a day trader. You do not have the personality type of a day trader. Now, does that mean you can never be a day trader? Absolutely not. Everybody changes. You can pick up new habits, right? If I wanted to learn more tennis and get better at my tennis game, I can hire a personal coach and go and practice more and get better. So by no means I'm trying to discourage anybody, but if you're the type of guy that plays that way, then you should avoid day trading and maybe practice some discipline and come back to it. So this is very important, guys. This is very important. As your account gets bigger, your allocation gets smaller. Now, when you step it up to $1 million account, this allocation is going to get even smaller, right? Because the more wealth you have, the more you're going to focus on preserving the wealth and consistent growth. All right. Let's go ahead and take on the next slide here. Ideal trading setup. Okay. So the number of monitors I would recommend using, first, based on my personal opinion, you need 3 monitors for a day trader. Okay. You need 3 monitors. Now, you may want another monitor to watch my stream, but every day trader, so if there was no stream, okay, you're going to need 1 monitor for your execution. 1 monitor for your execution. So you need 1 monitor for Thinkorswim, E-Trade, Tastyworks. I'm not going to name the other guys, but those three accounts. Okay, so you're going to need 1 monitor dedicated to executing trades. Period. That's it. You're going to need another monitor for the SPY and the Qs. You're going to need another monitor that has this chart, the SPYs and the Qs. I don't care how you have it set up. If you hate TradingView, use it on Thinkorswim, but you want to see what the SPY and the Qs look like. You want to have 1 monitor dedicated to that. Okay. The third one is going to be for your charts. So the third one is going to be, so let me go in here. So the third one is going to be for your charts, the way you're going to have your chart set up. Go ahead and plug this right here. Battery doesn't die. So you want to make sure that you have these charts set up correctly, depending on the weight, the watch list that you have for the morning. You want to have these charts. You always want to have a Qs chart. You want to have a SPY chart. Obviously this one right here is going to be on a separate screen, but you want to have one dedicated for your charts. So when you're in a trade, you can look over your other screen and look at the chart on different time frames. So let's go ahead and skip that. So guys, remember 3 screens, 1 for your charts, 1 for your execution, 1 purely for the major indices. And in this case, those major indices would be the SPX or SPY ETF or the triple Qs. What should you be viewing on these monitors? We already discussed that, how I adjust the stocks that I have on TradingView. So this is a great thing for me to point out right here, guys. So if you can pay attention, I will go ahead on the daily. I mean, if you guys have been watching me stream for a while, you're very familiar with this, but I will have my watch list in the morning and I will start moving stuff to the right. You guys will notice I'll start moving stuff to the right. What does that mean? That means that I'm putting this in a descending order from right to left based on what I believe is showing the most strength. So if I have DocuSign here, Amazon here, Chewy here, I'm implying that DocuSign is stronger than Amazon, stronger than Chewy, stronger than MRO, stronger than Facebook, stronger than Wayfair. Okay, so that's how I set it up. And you guys will notice that I'll move these multiple times very quickly, maybe in a matter of minutes or, half an hour or whatever throughout the day. So very important part, very, very important thing to pay attention to. All right, if you guys remember on Friday, I kept pushing Zoom up here and I was like, hey guys, Zoom is going to be, the stock of the day, showing major strength. So, that was just one example, but basically every day you guys see me do this. Every day I move the strength stocks all the way to the right. So that should help you guys get a better idea of my terminology and how I do this. Setting up the dome. Okay, so if you guys remember, what is the dome? The dome stands for depth of market. Okay, what are the benefits of active trader? How to set up the dome. Let's go back. So we're going to go ahead and answer all three of these questions at once. So what is the dome? What are the benefits of active trader? And how to set up the dome. Guys, this is the dome, depth of market. All right, if the market was live, this thing would be moving crazy right now. Up and down, up and down, up and down. With volume on this side, your PNL on this side, bid, ask, mid. Okay, this is referred to as the mid. This is the true mid. Okay, this is the distance between this and this is the spread. This is called the spread. All right. Now, this is by far going to be the best platform to day trade on. By far, the best platform. And so I'm going to go ahead and explain how to set this up. Very easy. You go trade, active trader, you click here. You're going to make sure you have two windows set up, or you can, once you get more advanced, you can have multiple contracts set up, multiple columns of active trader set up. But for now, for the sake of just as a beginner setup, I'm just going to explain to you how this would work. So first of all, if you guys are wondering, this script that I have here, this is from the Diamond Pro script. So I have that script right here. If you guys are wondering what that is, if you have a Diamond Pro membership, you can go ahead and download the script in our Discord channel. So let's go ahead and show you guys how to set this up. First, you'll pick how many windows. So in this case, I have two. Right here, you would want to select, right here, you want to select AT plus charts. Okay, so AT plus charts, active trader plus charts, active trader plus charts. This chart right here is a chart on Apple's contract, not on Apple, on Apple's contract. This chart is on Apple. This is on the actual Apple stock. This is on this is strictly on the Apple 10/23/119 call. So that's what this chart is on. Okay. Now it's important that we have these side by side. We want to look at this is the most important chart in my opinion. This is the most important chart. You want to have this here, and this is especially important for people that are not open to using active trader and they want to maybe do their charts and their execution all on here. In this case, then you wouldn't need a trading view, and you would just have you would just extend the screen to a second screen and have more screens, more charts set up by just selecting more windows here, and you would have more charts set up in order to follow the stock that you're currently in. So the way we set this up right here is very simple. So you select the amount of contracts. So let's say right here we have 50 contracts set up. When you have auto send set up, guys, keep in mind auto send is not for beginners. Again, auto send is not for beginners. When you have auto send set up, I don't recommend your kid sitting next by you, because if your kid is sitting there and he presses a button on the mouse, guess what? You just bought 50 contracts of Apple. Okay, so you just spent a lot of money entering 50 contracts in Apple at $250 each, yeah, hopefully the stock goes up. So if you have auto send set up, make sure you have no kids sitting around you. Make sure there's no distractions. Make sure your hand's not on that mouse. Make sure you're very aware. Okay. If you don't want to do that, your trading is going to be a little slower. All scalpers, professional scalpers, will have this turned on, because if you don't, and if you click here, then the window is going to pop up and it says send confirmation. It's going to ask you for a confirmation, and then you're going to press yes. So again, positioning is very important, especially in scalping. You miss one candle, you could potentially miss out on a lot of money. So auto send, we want to have that set up. Another thing we want to do, by the way, this right here is a quick way to pick contracts, 10 contracts, 30 contracts, 50 contracts. That's a quick way to do it. I wouldn't change anything here. You can customize and kind of move some things around if you like, or you can just completely close this out if you like. All up to you. When you go into settings, by default, it's most likely not going to show that. You're going to want to put volume, bid size, price, ask size, and PL open. That's all you need. You don't need anything else. Don't overcomplicate the trading. You need to see the ask size. You need to see the volume, bid size, your mid price, and PNL, just so you know how much you're up in the trade. You can see a dollar value. Okay. I believe this easily covers how to set up the dome. If you guys have any further questions, please feel free to reach out to me again. It's super easy. You go to Active Trader, you choose how many windows, you go ahead right here, AT plus chart, like this, right? And then again, you see that this reset. So we're gonna move this down here. This is not Apple anymore. This is something else. So anyways, so this is actually a future now, but you want to have the contract number loaded here, and when it's live, this is exactly what it's going to look like. So you're going to see the volume, you're going to see the mid, you're going to see the buys, and etc. So let's go ahead and take it to the next slide. Discussing platforms. You guys will hear me talk about this all the time. Okay, what is the best platform to scalp on? Guys, take a wild guess. Think or swim, right? TD Ameritrade. Why? Because it has the active trader feature. TD Ameritrade is the best. Think or swim by TD Ameritrade is the best platform to day trade on. Some other notable platforms are Power E-Trade by E-Trade. I love this one myself. This is the one I use. Another great one, Tastyworks. Recently, I've been using this just to get a little bit more familiar with the software. It has extremely fast execution, zero lag, very fast. These two softwares are much faster than Thinkorswim. Thinkorswim is a very older software, although it has the active trader feature. You know, it's got its cons, it's got its pros and cons, and you know, the pros of these two right here are very, very fast execution and super fast software. Let's go next. So the worst platforms to scalp on, guys, you probably hate to hear this if you are a Robinhood trader. So if you are a Robinhood trader, or if you have Doe, which is what somebody pointed out to me, I didn't even know what it was. I looked it up and it looked worse than Robinhood, no offense. Or Webull. Guys, I've been showing Webull a lot. I love Webull. I use it for watch lists now. Excellent platform. But you cannot scalp on Webull. It's not meant for scalping, right? Zero commission. These zero commission on Webull and Robinhood. So they'll give you bad fills, okay? And you will not be able to, more than likely, exit that position in time. I know for sure on Robinhood you can. I mean, some people may be able to do an effective day trade, buy something, hold it maybe for a little bit, and then sell. But if we're doing a true scalp, for example, and I'll do those a bunch. You know, if you check the alerts for Monday, if you check the alerts for last Monday, you'll see that there were a bunch of there were like 15 trades that we did that were all scalps, all actual scalps. So 5 to 7% profit. That's it. 5 to 7% in and out, in and out, in and out, in and out. Right? You cannot do that with Robinhood, guys. If you are, I'm gonna make this very clear. If you are trying to scalp on Robinhood, I do not recommend that you follow my trades. Okay? If you are on Robinhood or Doe or Webull, please do not follow my scalps. Please. If you are interested in scalping, consider switching to a different platform. Also, another thing I wanted to add, if you have an account that's under $25,000, you should not be scalping with me. If you have an account that's under $25,000, you should not be scalping with me. Unless you feel, you know, unless you want to take all the risk on yourself and, you know, you want to, you know, you have your own strategy figured out or whatever the case may be. But I am not interested in, you know, having people on my stream that are going to be scalping with under 25K. So final thoughts here. Here's the brutal truth, guys. Those who know me, I know I like to be very blunt, and you know, I like to be brutally honest. Okay, because it's not a bunch of I like to use the blue skies and unicorns and Lucky Charms, and that's not the reality of day trading. Okay, it's actually pretty ugly. So 80% of day traders lose money. 80% of day traders lose money. Okay, 10% break even, and 10% consistently win. We want to be in this category. That's the category I'm in. And my goal is to get everybody that's following me on the stream in this category. How can we do that? It's not as easy as it may sound. It's much more difficult than reading charts. It's much more difficult than positioning, believe it or not. It's much more difficult than sizing. It comes down to trading psychology and other factors. So let's go ahead and get into that. By the way, guys, another fun fact, 75% of day traders lose all their money and never come back. Just a fun fact. The most important question to ask here is why, right? If you look at these numbers, you've got to ask yourself, why? Why would you want to day trade if 80% of people lose money, 75% lose everything and don't come back, and 10% break even? I mean, the odds are against you. So why, right? I mean, that's the logical answer to ask. So lack of discipline is a huge reason why day traders fail. Abandoning your strategy, not staying true to your strategy. If you have a strategy, apply it and stick to it. Okay, all my students that I do one-on-ones with, they know their strategy. You know, we've discussed their strategy, and you know they stick with their strategy. Just keep doing that, guys. And for those that haven't done one-on-ones with me and are not my students, who are just joining or who are doing their own strategy, guys, don't abandon your strategy. Stick to it. Stick to it so you don't fall into this 80% category. All right. Over trading. This is a big one, guys. This is a big one. This has gotten me so many times. Personally. So I'm not gonna sit here and talk about all my wins and this and that. I'm gonna talk about my mistakes too. As you guys see on the stream, I point out my mistakes all the time. All the time I point out my mistakes, right? Even if it's a win, I'll say that was a bad win, guys, right? I'll say that was a bad win. So over trading, avoid that. Have a profit target goal in mind. Everybody's gonna have a different number, okay? This is something that I cannot teach you. This is something that you gotta have a number in mind depending on your portfolio size. Generally, we wanna shoot for about 1% gain on your total portfolio per day. But again, that number gets smaller and smaller as your account value gets bigger, okay? Remember, slow and steady wins the race, not Tesla calls, up and downs, up and downs. That does not win the race. You just get screenshots ended up on Wall Street bets. That's it. So here's a big psychological factor that drives the market and also comes back to this right here. 80% of traders lose money. Greed, fear, hope, regret. Greed and fear drive the market. Everybody knows this, okay? The VIX index, referred to as the fear index, right? Basically measures the fear in the market, okay? Fear and greed are the two human emotional, psychological, emotions that drive the market. Fear and greed, period. That's it, okay? Hope and regret are what cause you to lose. If you're losing at day trading, if you're in this 80%, it's because you're too hopeful, and it's because you regret. So let me explain what this means, okay? Hopeful. This is being hopeful. Let's say we get in some contracts together, and we are scalping. I don't know. Let's say we're scalping Beyond, and we're up 25% on Beyond, and I'm like, hey guys. Don't get greedy here, right? Greed, don't get greedy here. Sell, I'm getting out. You don't have to follow me, keep in mind. These are just my trade ideas. I announce when I enter. You guys can all exit at your own wish. Nobody has a gun to their head, like I like to say all the time. You can exit as you wish, but the people that hold on are being hopeful that the stock is going to go higher and higher. They're going to be and they're also greedy because they're not satisfied with the gains that they got. Okay? These are the people that like to get rich quick. If you're one of them, I'm sorry to be brutally honest with you, but this is something you got to change in your personality. Okay? I had to change a lot of things in my personality. I had to learn discipline, which was extremely hard for me. Okay? It was extremely hard for me to take a loss. Okay? It was extremely hard. But think about it. Let's say you bought Beyond and you're up 30% and you don't sell, and then Beyond slowly goes down, slowly goes down. Now you're no longer in the profit. And let's say Beyond's in the negative. Now you're getting hopeful. You're also getting a little regret for not selling. You're actually going to get the regret phase first. You're going to say, oh shit, I should have sold, right? You're definitely going to think of that. Then you're going to be hopeful. You're going to be like, you know what? No. This is going to do good. This is going to do good. This is gonna get it. So you're selling yourself a dream. You're bullshitting yourself. You're not being realistic. Okay. At this point, let's say hypothetically you're down. Let's say you're down 10%. Okay, you're down 10%. Now you're still being hopeful. You're still being hopeful. Now the stock is still going down. You're down 20%, 30%. You're still being hopeful. But then you start getting the fear. You start panicking. Okay? You start panicking here. All right? And then, let's say the stock goes down to 50. You may just say, you know what? I'm out. I've had enough. I'm out. Or you may be so greedy and so hopeful to think, no, this is going to come back. This is going to come back. The stock is going to come back for sure. And you're going to hold. You're going to hold. So, here's what I meant. Let's backtrack 2 minutes. Here's what I meant by it was very difficult for me to take those losses in the beginning. And let me translate how those losses, taking a loss actually turns into being a win, right? If you would have exited Beyond, let's not even talk about the profits, okay? Let's talk about the losses. Beyond, let's say it was a 30% profit. You missed out, whatever. Let's say we're at 0 now, we're at minus 10. If you would have exited at minus 10, versus minus 30 versus minus 50 is where you exited, there's a 40% spread. Wouldn't you consider a 10% loss a win over a 40% loss? Doesn't that make sense? Very, very logical, right? So this is very, guys, this is very important. And this was, for me personally, this was very hard to master. It was very hard to master, to basically be able to accept the fact that just because I'm taking a loss, it does not mean that I lose, that I'm a bad trader, right? It does not mean that. I'm taking a loss in order to be a winner in the long run, in order to keep my consistency. Remember, I keep saying that word because that's the goal here. The goal is consistency, because I want to remain consistent. Okay? I hope that explained it to you guys. Being way too overexposed to a position. Guys, I cannot hesitate enough on this. And this is why I don't want people with under $25,000 scalping with me. Okay? If you want to, go ahead. That's fine. You know, to each his own. I'm not going to judge. But the reason why I don't want people under 25K scalping with me, it's because a lot of people under 25K have this goal in their mind. Their number one goal is to get to 25K as soon as they can. Okay? You know, come on. If you are under 25K, you're probably laughing right now because you know that's a fact. If you're under 25K, your number one goal is to get to 25K. Okay? So you can not worry about the PDT. So unless you're in Europe. But that actually that will actually have a psychological effect on you and backfire, because what you'll notice yourself doing with a $10,000 account is going in $5,000 on a trade. You're going to have that get rich quick mentality. because you're trying to get to 25K. So if you have a 10K account, you're going to try to go in with 5K, with 2K. 2K still doesn't make sense. That's 20%. 5K, that's 50% of your portfolio. That does not make sense. Okay. So overexposure happens when, overexposure can happen at any portfolio size. Don't get me wrong, but it happens a lot in portfolios that are smaller because they're rushing, and their number one focus and goal is to get to 25K. All right. Which is the reason why, again, I suggest people that are under 25K to not follow me with the scalps unless you're going to remain disciplined. Okay. The get rich quick mentality, I think we already went over this. Okay. If a lot of people that fail, this is all, if you guys notice a pattern here. You guys notice a pattern here? I didn't say anything about bad chart reading, bad positioning. This is all psychological. Think about it, guys. The failures of the people that fail are all because of psychological mistakes, right? So the way I look at this, actually, I look at this in a positive way, right? And I don't know if that's just because of me trying to always look at the glass half full, but again, I'm a very realistic guy. But the way I look at this is, if anything is a psychological problem, it could be fixed. You can reprogram your brain. You can reprogram yourself not to be greedy, right? You can reprogram yourself not to have hope, not to be wishful thinking, bullshit hopeful, right? You can teach yourself not to have a get rich quick mentality, right? What I like to say to a lot of my clients is, to a lot of my students that I do the one-on-ones with, is treat trading like a small business. This is your small business. Grow it slowly. Grow it slowly. If you open up a small business, are you trying to get rich quick? Right? If you open up a little restaurant, is your goal to pack out that restaurant overnight and just have a line outside every single day? And no, you're going to grow it slowly. So treat your brokerage account as if you have a small business. Remember that. Lack of reading charts and recognizing patterns. Now, guys, I put this last. The reason I put this last is because, in my opinion, it's the most irrelevant. Okay. It's still relevant. But I would say the weight of this on all these factors is probably less than 10%. Honestly, it's less than 10%. I think it's all psychological why 80% of day traders fail and they lose money. It's not because of lack of reading charts and recognizing patterns. I have people DMing me that saying, that based on watching the stream for like 2 weeks, they've picked up on how to read some charts and patterns. So it's not that. Reading charts and patterns is easy. It's easy to learn. It's easy to quickly pick up. Definitely hard to master and become proficient and very, very good at. But you can pick it up fairly quickly. It's the psychology part that's the difficult part, and this can take years. This, honestly, I'm not going to bullshit you. I'm not going to sugarcoat shit. This can take years. This took me years. Especially the discipline part, especially the strategy part, especially the greed. Oh God, I was fucking greedy. I'm not going to lie. And it took a while. It took a while to overcome that. But when I did, I was able to be consistently profitable. Poor use of stop losses. And sorry, I can't see. Poor use of stop losses and OCO type orders. So I'm not going to get into the details of this. We can Google this, obviously, but everybody should know what a stop loss is by now. If you don't know what OCO is one order cancels another, or referred to as like bracket type orders. And you guys can Google this yourself and you can look into it. I strongly recommend using them, especially if you're a beginner. I personally use mental stop losses, But you know, if I'm going in very heavy on a position, best believe I'm going to have a stop loss or some type of OCO type order. And I believe that wraps it up, guys. That wraps it up for us. I really hope you guys found this helpful. If you have any questions, feel free to DM me. You guys should be familiar with my DM by now. My username on here is Julian949. Reach out to me. I do my best to get back to everybody. I get a bunch of DMs every day, so I do my best to get back and help. And one thing I want you to keep in mind is I will help you as long as you demonstrate that you're applying what you're asking for help. As soon as I notice that you're not applying what you're asking for help for, please don't come to me and ask me for help. Dead honest. So, in case you didn't know, guys, I'm live every day from 9:30 to 11 a.m. Eastern time, and sometimes I even stay longer, right? Sometimes I even like to stay longer if I see more opportunities to make money. This is usually around Mondays and Tuesdays, but nothing is guaranteed. But if the opportunity is there, I will stay longer and I will day trade with you guys all day. Guys, I hope you found this video helpful. If you have not liked the video by now, like the video, feel free to drop a comment. If you have any questions, drop a comment. I'll look it over. And if you are not subscribed to our channel, I don't know what you're doing, subscribe right now. And again, thank you so much for your time. I hope you took away a lot of value from this. And I wish you the best. We will be trading live tomorrow, and I hope to see everybody there. Take care, guys, and have a great weekend.